G'day everyone, this is Rangadad, not financial advice, just the way I'm looking at the market. This is my just daily market scan that I do for myself. Doing it on video helps keep me accountable myself more than anything. Um, yeah, interesting data come through today that has seemingly dropped the market. A couple of data points here, which makes me think maybe longs aren't play in the short term. But let's go through it. So, Challenger job cuts. This is something I pointed out yesterday, pretty well for the first time on this channel. It was for the first time actually, because I haven't really seen it as that important. But what surprised me today was the fact that this jump is pretty significant. It's gone from a negative number, pretty decent negative number, negative 40% to 103% positive. And you don't often see numbers that high. And typically when we weren't seeing them that high. I mean, August 2008, which let's just see. I think that's when the last recession was actually called. Oh, that's a nice close to get to that in a minute. 2008. Go to weekly. Two 2008. Okay. It was still that week, July 2007. August 2008. Yeah. August 2008 basically was sort of the second dead cat bounce on the way down before the really big drop in the GFC. Not saying it's going to be exactly like that or anything, but like it is different to that, what's happening. But it's not looking good. And we have had higher reads that haven't necessarily led to massive downturns. November 2018, that's a quick look at that. In November 2018, somewhere in here, again, sort of on a dead cat bounce before a bigger sell off. A little bit different here. We've already hit the 200 EMA, and today is a confirmation of that 200 EMA. Just want to have a look at that percentage drop. So it would have been somewhere in a very similar percentage drop level to what we've already had in the 2018, and then we actually went basically 20%, full 20%. We did grind up after that for basically the rest of the year and into the following year before COVID. Yeah, I remember around this time, economists were calling for a massive recession and all sorts of stuff. And they're calling for it again here, but leading into COVID, there was talk of something big on the horizon. Economists don't know why or how the market's going up like it is. The global economy is looking nasty. And then COVID hit, gave us a bit of a reset, but also pumped a shit ton of money into the system. So what does this mean for us? Basically, what I'm looking at is could actually mean we go a little bit lower on this dip. Sorry. Right, wrap up. And look, there was a decent dip there. It had a spike, had further dip in the market, but then sort of it just tapered back into COVID. Obviously, we had a fairly decent spike towards the end of 22 as well. And 23 was a bit of a panic for job cuts as well. So it's a tough one. I'm not gonna trade this as such, but it's going to give me a bias to the downside for the next couple of months at least, while we watch what happens. Try and pick it up next time it's in the charts. I don't often look at this. It's just at the moment when things are so choppy, I tend to take a few more data points in. The other one, non-farm productivity's actually bounced a little, or it's up higher than expected. Unit labor costs are up though as well, so trade balance down a bit. Canadian PMI is up quite significantly. Not sure what Parker's talking about. Maybe it's moving as well, but wholesale inventories. This is an interesting one. So this is a sort of plays into that bullwhip effect on inventories that I'm talking about. So we could be getting into a point where businesses have expected sales to stabilize or even increase. They've ramped up inventories and they're not selling them. That's a end of trend sort of sign as well. So yeah, that's not handy. Natural gas storage wasn't down by as much as they thought. Not a huge deal there. Trump is probably going to be speaking again, but tomorrow is going to be the big one. So Powell is talking after the unemployment rate comes out. That seems like a setup. A fair time after it comes out too, so about 4 hours. Potentially give them time to see how the market reacts to it, and then would even potentially see an emergency cut. That would shake things up quite a bit. And then obviously we've got Trump speaking again later in the day. So tomorrow's going to be pretty bouncy. Consumer credit could be an interesting one too. But the other one yesterday was the Japanese bond auction. They got the highest yields they've got in ages. I think it's years and years. And the spread, if you have a look at this gives you a fair bit of information. The bid to cover ratio, the number of bids made per bid accepted, has dropped off. So there seems to be less of an interest in government bonds, even in Japan, which is a fairly stable. It's considered stable in comparison to other governments' bonds, but same sort of thing. The French one was a little bit better. That's not great for the Spanish one. That doesn't look particularly good. But yeah, both of them are getting higher yields. French one at least had a few more bids per auction, but Spanish one, that's a big drop off in interest. So one to keep an eye on. Basically, what that means, and this is another one, the British bond auction 30-year. That's a pretty significant jump for a 30-year, and again, less interest in it, so less buyers per auction. Yeah, it was a similar story with the 10-year for Japan. Yeah. German bond yields are increasing as well, so again, less interest in the bonds. Could be a bit of a credit market issue coming, but just keep that in the back of your mind. That seems to be, could be part of the narrative of whatever type of recession we're going into. Smart money is pretty interested in this market at the moment. It's still going up as of yesterday. Dumb money flattened off a little bit yesterday. I suspect today it's coming back even harder. Still not seeing massive trades on dark pools either. There are some on S&P 500 and stuff. Go over to FX Evolution, have a look at his video for that. I don't necessarily agree with everything he does, but they have some really good data. So this concerns me a bit. Lots of trades through the highs here on IBIT. That could be a problem for Bitcoin. So keeping that in mind. The other thing is Coinbase it's holding, and I'd actually rather see Coinbase dropping off as well. Give me a better indication. The fact that we didn't have any big sells up here was also a bit weird for Coinbase. And largest. Yeah. It seems like this is an accumulation thing rather than a sell-off, but I have to wait and see. Yeah, the 2x long fund getting a fair few trades around this level. So whatever it's above that, still seems like Coinbase wants to go long. So there is still hope for Bitcoin. Mara, same sort of deal. It's not dropping. XLP looks like it's getting some buyers through here still. I suspect staples are still going to go a bit higher. And it looks like they've actually found a bit of a bottom. XLY looks like it's still going to drop off though. So that's coming through some pretty decent levels there. Haven't, like, we're seeing a bit of dark pool activity down here, so could be getting close to a bottom, but yeah, nothing major coming in yet, I would say. XLK, it's at a pretty key level as well. Not looking super healthy. The fact that we haven't got any major trades through here yet. Probably look for the ones after the close. Utilities, yeah, on the 90 day, it's looking like this should be a bit of a support level. Like to see something decent come through though. Like we had some fairly good trades come through here previously. Yeah, maybe it'll come back into this area a little bit further before they actually buy it up. XLV, so healthcare was getting a pretty good run on it. It is a defensive sector, but if we're heading into a major correction, everything's going to come down. It's just what comes down less than others. XLF, so financials is still grinding to the downside. So this is probably a bit of a canary in the coal mine for us. If financial sector starts breaking key levels, then yeah, there's cracks forming. Just on this one, it'll come down a little bit further just to sweep this level at least. At least, it'll probably actually sweep these candles here. I'm thinking at least into 87,370. Maybe a little bit further. There are some pretty big long liquidations in here, so be careful of that. It's been a fairly quick move, but yeah, it's grinding to the downside. Cumulative volume deltas still moving to the downside as well. The other thing is 84,500 was a pretty key level as well. There was some pretty big long liquidations in there. We were looking at that in this region. For Bitcoin to bounce and to go into a decent second leg up, third leg up actually, it needs to find some support around there. If we're starting to break back below the 81 level, I suspect that will be the end for Bitcoin. Now, there's people out there calling for 73K Bitcoin for the bottom. That'll be the last bottom, blah, blah, blah. I don't think so, and I'll tell you why in a second. The interesting thing to me is spot CVD on CoinGlass still quite high. Like there's been way more sort of buying pressure from spot than what there has on the futures, which suggests we may find a bottom. Pullbacks should be limited. Now, obviously, we'll have to wait and see what price action says about that, but there's a little uptick in CVD and futures here, whereas spot's actually coming down. So these are providing some mixed signals at the moment, but a fairly decent buying pressure on the bid-ask delta too. So, you know, all things considered, this grind down, it should just be picking up some liquidity. Yeah, there's a pretty decent level at 85. 84.5 would be just in there. Could actually slip a little bit lower than that, just because there is so many longs in the system as of the last 48 hours, or even the last 24 hours, just to sweep these levels if it's going to push higher. Yeah, there's some pretty decent levels. That's a lot of liquidity. Go to the weekly quickly. Now we can leave this behind and just dump off. No like there's nothing that says we have to take this, but that's a lot of shorts in the system. A lot. Yeah, into 85, potentially into that 84,500. Maybe even a little low, 83,700. If we're breaking those levels, it's going to get very interesting to the downside potentially. But at this stage, if this is just a short pullback and then we move to the upside again, then these levels here, even up into the 96.5. And once we're breaking that level, I suspect it will actually just keep pushing until everything breaks anyway. So 1 foot out the door for the time being. Liquidation map. A lot of shorts in the system over the last day. 7-day, we're still heavy to the longs though. So again, move down into sort of the 84s would take out a lot of that, would square it up quite a bit. In fact, it would then be quite short biased on the 7-day. But yeah, on the 30-day, it's still quite heavy to the shorts as well. So yeah, sweep into these sort of levels. It doesn't necessarily have to go that far, even just to move into 86, would take out a fair chunk, about $1 billion, and then a potential move to the upside. That move to the upside will probably happen pretty quickly too, if it does. So it's all a matter of whether we get a Fed put or not, or even whether Trump is the one that triggers it. Dang, this is a nasty looking weekly candle where it's sitting at the moment. Holy crap. That does not look good on the weekly. What we can be on the lookout for on the weekly is a potential bounce. Again, if Trump comes out, says something the market likes, next week we could end up retesting this breakdown. Do we have to do that next week? No. Could be the week after, could be a month later. But generally, you would expect a retest. And similar to what happened here, is that a good line? But basically, big drop back into key demand levels, and then a bounce for a couple of weeks. So we've had a big sell-off. Big sell-offs like this can keep going. That's COVID though. You would have to have a massive issue going on for that to happen in that manner. Typically, a couple of weeks sell-off, you tend to base a bit. Let's just look at GFC. So I still think we're somewhere up around here, potentially in this sort of level. Okay. So that we're sitting in here, and yeah, there was actually a decent trend line. Sort of, let's call it that. If we are sitting in here, then it could be choppy for the next couple of weeks. And this March is supposed to be a choppy month, but we're also supposed to find a base in these sort of years. The second half of the year can be quite good. Excuse me. So yeah, it could be another couple of weeks down, and then potentially a bounce up into that trend line. Pick up the vector candles. It's one thing that they don't tend to leave vector candles on the weekly without reclaiming them, at least retracing most of them. Can leave them for a little bit, but effectively that was recovered, that vector. This one was recovered literally the following week. That's a massive weekly discrepancy there on the open. Left this one for a little bit. but these were pretty tumultuous times too. It sort of you're talking recovery after a major drop here rather than at the highs. So yeah, we could get something like this, find the base next week, and then move up. But just have to wait and see. It's it's a pretty nice looking candle though. That's the takeaway here, and it's just a matter of whether we get continuation or whether we get a bounce and we come back up into that level. Looking at it on the daily, at least we've properly tagged the 200 on the daily now. EMA. Still haven't hit the EMA. Anyway, close enough, I think. But markets are not liking this. I do still like this for a bounce up here next week or two. It'll probably be a grind, but at the moment, smart money is buying this pretty hard. I think it was either yesterday or the day before, hedge funds sold like billions of dollars worth of stocks and ETFs and stuff right at the open, really close to the lows, and then we had a bounce just to piss them off, basically. But this is, it's kind of what we expected, but and we haven't broken below this level. Breaks below this level could look pretty nasty, but at this stage, and momentum's still the downside, but I am expecting a bit of a bounce here for the Friday session. If Friday's negative or Trump comes out and says something stupid, then we could flush this level and very quickly we could actually fall into this vector candle here. For the time being, we're in a pretty decent buying zone. But this this vector here that has not been recovered is a potential area to watch out for as well. And I think we will come down into that area over the next few months. But I still expect a dead cat bounce here, similar to what happened in the GFC. Potential, like leaving a daily like that too seems seems a bit sus to me, but it's recovered some of it, but not as much as I thought it would. So don't be surprised if we chop around a bit more this year, potentially get back up close to another high, somewhere up like 600, 605, that sort of area. But then I suspect this would be the target as a minimum. If it's something more nasty, then we're going lower. But we're at about 7% now. I did like the 10 to 15% drop this year. If we're going into that, then I don't expect it to happen on this pullback. There's too much smart money interest in it. And dumb money's already basically capitulated. Nasdaq does look like it wants to close below the EMA. You still haven't quite tagged this trend line, depending on where you want to draw this. It's not a bad level. Yeah, there's plenty of supply through here. We basically picked up this level here, this little area in here. Could get a sweep of this low in the session tomorrow, like early on with the numbers coming out. And then if Powell or Trump comes out and actually supports the market, says something the market likes, put it that way, they're not, I'll tell you, they're not interested in what the market's doing. then, except for Trump, he prides himself on having a good market. So I fully expect Trump to say something that will actually make the market bounce. And in which case, there's some pretty decent targets above. But fuck, it's for those that were around last time Trump was in, it gets pretty freaking bouncy. It's all the markets react to what he says so much. So it's a Trump card. I just think after a pullback this severe and wiping out so many people, a bounce is due. It's just a matter of. And at the moment, we're still not seeing any major breaks. We're seeing the bond market have a little bit of a show of its hand. Like the bond market does not like what's happening globally at the moment. This is an issue for me too. Breaking this trend line on the equal weights. We could pull back into this area. That could be similar to some of those previous drops where we had a big red weekly candle. The next week it actually dropped harder, but recovered towards the end of the week. Yes, this is going to be wild this week. See what happens. But I think shorter time frames are going to be the key on this. Equal weight S&P 500 has not broken below the 200 EMA yet. That's a positive sign for me. It's still not looking great though. Like this is obviously a lower high. You kind of expect a higher low. Oh, sorry, a lower low after that. Yeah, that's and momentum's to the downside. BBWP's increasing. Not looking great. Just going to draw in another trend line here, which could be key for us next week. That there, I'll be looking for that to. We can get rid of that. That's not going to happen. Yeah, this sort of area actually looks like a target. So maybe a bit more downside, yeah. But if we don't bounce from here, then we'll be squarely in bear market territory, I think. Unless Trump can say something that over the next 3 months that the market really likes. Any bounces will just be dead cat bounces. IWM hitting pretty decent levels. Interestingly, on the US 500, it's picked up and it's still above the 500 at the 200 EMA on the daily. IWM again, it looks like it's trying to find a base here. I have to wait and see. I actually think that should come back still. There is some support around 198. If we get like a smaller drop over the next week, that's potential support. That's going to be a hell of a resistance there. So yeah, that's a bit of a coin flip at the moment. There are some arguments for upside from here, and this candle will freak a lot of people out in that there are some breaks at the 200 EMA, but at this stage, hey Marsh, at this stage, I wouldn't say it's panic stations yet. Just have to wait and see what Trump and Powell say next week. Oh, sorry, on Friday, US time. This isn't this suggests it is bear market time. So XLP versus SPY. We haven't broken back above this candle yet. So again, it could just be chop. We haven't really retested this level, and this is a pretty good trend line if I drew it properly. So yeah, just trying to make, like, we could still chop around here for a little bit, and it could still, like, we haven't broken above that. If we break above this, then I think it's game on to the downside. It's, unless this doesn't work all of a sudden, but it has been a very good indicator for further downside in the past. And again, we're at very key levels. We're at levels on XLP versus SPY that we haven't been at before. So equal weight, XLY versus XLP. Again, it looks like it's actually failing that trend line. It's not looking good. Again, I think watch out for news events after the market close. Something seems primed to break. This is the saving grace that we haven't actually broken the key trend line on the equal weight. It still concerns me that we have on the XLP versus the SPY, but and this is looking like continuation of the upside, which generally not a good thing. So we may have another couple of days down, find a base, then have a bounce, but then I fully expect it to break back next time it breaks this trend line, if it does this time. Next time it breaks this trend line, it will be on the back of something more nasty for the markets in general. Still a decent level there for bounce. KRE, so regional banking, is toying with this one. Not the strongest trend line, but pretty decent level for some support here as well. But yeah, it's not looking great. XLF, XLF's finally hit the 50 on the 1 day, and could find a bounce here. So we're basically in a holding pattern until tomorrow. Home construction is getting a bit of a bid at the moment still. If we break through this trend line, that would support a move up on the rest of the market. Not that this is an indicator of where the market's going, but it would suggest that home builders and home construction aren't out of the, like, they haven't fully shit the bed yet, which should suggest the economy's not crashing yet. Semis, yeah, look, semis is, it looks like the market's basically saying, nah, you're overvalued. This vector candle's just waiting to be hit at this stage. That's, I mean, that doesn't look great for the market either, but yeah, I'm not gonna, don't think this is going to be as important for the market as what some people might think, but could just be a rotation thing out of the highly valued P&E price to earnings ratio stocks into some of the better value one. DJT versus gold, still struggling, but it looks like it's finding a bit of a base. Yeah. VIX spike. It's to be expected. And still not really breaking any highs in the VIX. Still an hour to go. We'll see what happens. Not a bad level for a pullback in the VIX, but see. Tends to not tends to not sort of grind up like this and then go for a spike. Let's see what happened in the GC. I think this is sort of more what we're doing at the moment. Again, back into sort of 2007, where the VIX just slowly started making higher lows, and probably somewhere in this region here at the moment. Ones where it just grinds up like this aren't necessarily like massive crashes, and that generally you will get a bounce, but it will be a dead cat bounce. So this looks more like it. But yeah, basically that it's a grind up like we're doing now is suggesting to me that we have hit the top on the markets. We're very close to it. And it's just a matter of when we're going to get the next big news or next big surprise to the markets that just drops everything. Yeah, still expecting a bit of a bounce soon. Just, whoa, skew got hammered. I guess, yeah, prices are down pretty hard too, but interesting. Like we're at levels of skew now that we haven't seen for quite a few months. Can it go lower? Yes. Still would like to see a bounce on this that brings us at least up into here, and then we start putting in the lower highs. Does that go back to Feb? Okay. Pretty high levels compared to history. Yeah. Big levels there. Quick look on the weekly. Look how high that skew's gotten compared to throughout history. But interestingly, we started putting in sort of the big drops and the lower highs. First decent sort of lower high on the weekly was the peak here. It sort of was happening around the peak for that bear market in 2022. So looks like something similar could be happening here. Again, like from this sort of level and a big drop off on the weekly over a couple of weeks actually, was the first sort of pullback, but we did have another run up that got through from September up into December, so a 3 months run up, and then we put in that lower high on the skew on the weekly, and then downside. So that's what I'll be looking for. be looking for a lower high on this, and then essentially just looking for shorts from then on. We go to VIX 1 day. Wow, that's that's put in a nasty week as well. Okay. Again, oh man, that's a VIX 1 day, not a bad level. We are spiking. We could have another couple of days down, or another day down or so into similar level. But again, whatever this is pointing to the upside, markets are generally downside bias. Volatility's got a little bit to go on it too, so yeah. It's amazing how quickly markets can shift in terms of sentiment and momentum. DAX, what the frick is going on over there? That's just insane. Looks like the DAX wants to hit bloody 25k. That's just mental. Huge volumes. This is looking like a blow off top on the DAX. Chinese market, good move. That's again, it looks like money's potentially going to start shifting out of the US into other markets. This is looking nasty. So that trend line is a pretty major one for the UK 100 by the look of it. And this is looking like a double top. Whether this trend line holds up or not, wait and see. But that's a pretty negative day. It's just interesting the UK market's going so hard to the downside. It was following the DAX pretty well. So as we were talking about, it's a choppy global economy out there. Japanese market looks like it's finding some resistance and still in a downward trend at the moment. Momentum's just ticked out of the bearish control zone, but have to wait and see. That'd have to get a green candle tomorrow to be suggesting a base. TLT closed the gap and got a fair bit off that as well. I suspect TLT is going up because I think if the economy shoots itself, they're going to do something with rates. The TLT should climb. The high yield jump still surprisingly high. Like, this is the thing that's baffled me. High yield jump. If the bond market thought that something was really wrong and that we weren't going to bounce, I would have expected this to really drop off quite hard. Just haven't seen that yet. LQDIEF, again, it's sort of suggesting that we may have found the bottom as well. It hasn't dropped anywhere near as hard as what the market has today. So, I would actually suggest that this is more aligned to an upside in general. That'll be a key level for us, but the bond market doesn't seem to be too worried. 2-year yields look like they might have found a bit of a base, but at the same time they could drop through that. 10-year yields, I mean, this is a good level for a retrace, but then a pullback to the downside. Copper hit that target and bounce and resistance. So this is one to watch. If copper breaks the upside, then all good. Gold, that's an interesting one. Hasn't put in a new high or anything. Couple of dojis there though. Yeah, I still want to see it back down to here before I get the rest of it. Could just leave that, not get back into gold in this run. I'm happy with my other investments at the moment. Interesting that oil has found a bit of support here. There is a doji, but I suspect that that's going to probably base here. Rising supply and weakening economies, yes, but yeah. The fact that the US oil reserves have actually been replenished a bit, I think OPEC will step in and increase the price of oil. Dixie, interesting level here for Dixie. Let's see if it can come back into this zone or whether we've actually found a base here. There is a lot of vector candles on the Dixie there. Kind of still leaning towards there being good news come out from Trump and Powell, which will help the markets bounce tomorrow. But man, it's a coin flip at the moment. Trying to decipher what the market thinks it's going to happen is a tricky one. This is a good bounce though on global liquidity, so it's suggesting some support for the markets. I do like that. Percentage of stocks above 50-day moving average has had a little jump as well yesterday. And this is a good level for a base for it. It could break that level though, for sure. Mag 7, again, I think it's just money moving out of the big guys that are probably overvalued at the moment, or they have a very high price to earnings ratio. But at the same time, this could easily bounce too. Just going to say there is another trend line there that it could pick up. And obviously this area in here is a pretty good level for some demand. Still, Tesla still hasn't closed this gap. It's just edging people at the moment that are shorting to take profit there. Nvidia still finding support off this level. I think it's just weeding out the rest of retail. Moment, these drops have just been too big for too long to not find at least a dead cat bounce soon, I think. So overall, the economy looks shit. Microsoft sort of reconfirmed a break to the upside of this downward trend. That's a steep downward trend. So yeah, it's looking okay to the upside. Momentum's out of the bearish control zone too. RK looks like that has been a decent support level. Again, we could sweep that vector a little bit before moving to the upside. So tomorrow's market, the way the charts are talking to me at the moment is maybe some downside in the morning after the numbers come out, and then upside in the afternoon after Powell and Trump speak. That's just best guess at the moment based on what's on charts. But geez, some of these charts look nasty. I think it's just a matter of time now before the recession hits. Apple again finding decent support off this trend line. 3M. Amazon, good buy zone. Pretty good buy zone, really. Meta, testing this level again. Not too worried about that unless we get another close below there, but another good level for a bounce. Airbnb. Again, back to candle recovery here. Airbnb might struggle if the economy does shit itself. Airbnb is potentially going to struggle, but it is a pretty well-run, profitable company at the moment. AMD, yeah, still looking pretty shitty. Broadcom, it's not a great candle if we're closing around here. But again, it's not a bad level to bounce back above that. Just wipe out some of these guys that were going long too early. It's hard to be positive on the markets, but generally this is where you want to be positive on the markets historically. Aussie market has reclaimed this vector wick at the moment. Still some more to go though. Again, sweep into that level and a bounce, potentially a good bounce. Like to see it recover up around 8.478, maybe a little bit lower than that. Doesn't have to recover that full vector candle, but yeah, this is the first shot across the bow, I think, for markets. ETH BTC longs. I'd love to meet the people that are doing this, because they're still getting hammered. They just must be ETH maxis with a lot of money. Interesting one. BTC longs just took a dive. Have a look at that. That's a little bit of a market freak out there. A lot of these guys from here on have probably just got into profit. From this candle here, they would be in profit. So it'd be interesting to see if this keeps flushing. Typically, that's not a great sign. Normally, you flatten out a little bit more too before you start dropping at a high. So hopefully it's just a little pullback like this one before another run up. But interesting chart to keep an eye on. Certainly some profit takers out there at the moment. Shorts have started to build a little bit, but nothing major. And then, yeah, this is, whoops, let's go back to this one. So yeah, it could end up with a doji here right around a key level. Kind of got to a no man's land level there, just recovered the previous day. I'm going to look at this on the 1 hour. So this is total versus stables. This is a pretty positive 1 hour candle. Reclaim at the 50 EMA would be handy. Prefer to see it above the 9, but for the moment, I'll take this as a base sort of structure. And some vectors above. So we didn't quite hit this as resistance either. And that is a fairly major trend line. So I look at this as being potentially a bit of a bottom here. Getting a run up, essentially. We've had a decent push here. We need to relax a bit before we get some energy to go through this level and up into here. So that's not a bad sign. Could we drop further? Yes, because this should provide a bit of resistance as well. If we close back above it and sort of confirm above it for a little bit, not too worried about further downside, but the next couple of hours we'll have to wait and see what happens. If we just sort of bounce around this level and work our way back down, then it could get nasty again. Back into this trend line. And that's basically our bull market support trend line. For the time being, though, that's a pretty good turnaround level. Did still expect it to come back into here a little bit more, but it's not the end of the world if it doesn't. BTC. So, sorry, just coming back to the BTC chart itself. Again, it's moving averages that seem to be holding this little pullback. Not a lot else there. I've got to be a little bit careful of it because it's not a great level. Back into the middle of this channel would be a fantastic level for a bounce, but for the time being, it's looking like it wants to try and bounce. It rejected off a fairly decent level, got close to this trend line, which again, they're regions. But I do suspect that we will try for this value area low at least. And I've still got a target up around here, at least 96.5. I suspect if we're doing that, it'll be on the back of some decent news out of Trump or Powell. And it's an interesting one. So on CME, this is a pretty strong trend line here. Could just be a 50 EMA recovery. Closure above this trend line, which it looks like it wants to. Again, would suggest that there's some strength here. And then I'd actually be looking up around this trend line. I'm going to move this one down though, because that picks up both of them now. Doesn't really hurt the rest of the trend line. Okay, so maybe some resistance here, probably a bit of chop, but I do expect it to hit that at least. And again, potentially choppy. If Trump or Powell spoils the party, then watch out below. We would at least test the test that bull market support trend line again. This is another one to keep an eye on, sort of through here. Okay, the CME, keep an eye on that. Wall Street's governing what's happening on crypto these days, at least BTC. So CME is an important chart. Okay. In fact, I'd probably pay more attention to CME and the total versus stables than what I would the actual Bitcoin chart at the moment. LTC, not a bad level for a bounce here too. No. I mean, momentum's in your favor. It's a nasty looking wick on the 1 hour to leave behind there. Sol, support off a decent volume level. That's looking pretty reasonable. XRP, good support off this trend line. Yeah, it's looking okay as well. Sui, finally got a run on it. Closed my long on this yesterday. I just wasn't liking the look of it when Bitcoin was moving down at one stage. And then, of course, it pumped. Ugh. It's the thing with stables. You've got to have, like with altcoins, you've got to have some commitment there. Hype. Looks like it might be basing here, actually. That would be good. Yeah, H bar. They're all at pretty good levels for another bounce after pretty decent pullbacks. This is looking nasty. AI16Z. AI coins have been hammered pretty hard. I just don't know if they're going to get, except for grass. What the freaks with grass? That's a good level for a bounce on grass too. Yeah, they picked up a pretty decent supply level there. Huh. All right. Grass might be a play. Don't know how long it'll last, but yeah. Oh, Jesus Christ. I mentioned this one the other day too. Wish I had actually bought some. Wowee. 37% would have been a nice bit of pocket change, that one. Lingo. Again, looks like it's putting in a higher low here, so that's a good sign. I have that on there because that was one of the biggest releases this year or this season. Super as well, same deal. It was a pretty big deal. Both been hammered, like pretty much everything that came out this cycle. But looks like they're finding a base as well here. Gaming, yeah, got hammered on the pullback. Look for it to put in a high low as well. Don't get me wrong, I still don't think there's going to be a massive alt season or anything like that. But these will do bigger percents than Bitcoin if you game. And yeah, it's ballsy if you take leverage on them. Pengu. Whoa, I had a flush. Kind of like Pengu. It didn't go up with Bitcoin recently though. If it goes on a run, it's a decent run though. Just to pick up this vector candle here is 25%. Is the risk reward there? I don't know. It's up to other people to decide. I've sold mine ages ago. All right. I think I'll leave it there today. In summary, looks like we're still okay for bounce, but markets are still on a knife edge. Watch for the data tomorrow around unemployment claims and what is it? Non-farm payrolls, is it? Let's have a quick look, sorry. Average hourly earnings, non-farm employment change, and the unemployment rate. They're going to be important. Can I tell you which way it's going to go? Not necessarily. The market will use the data in the way that it wants to. And then after that, obviously this could flush the market a little bit further. And then after that, I'd actually, if it does flush, I'd actually expect whatever Powell says and whatever Trump says to actually cause us to find a bottom. So could be choppy. The market might like the numbers that come out here and go up, and then these guys actually drop the market on what they say. It's a coin flip, but the bond market at this stage is suggesting that we have found a bottom today, or at least we are finding a bottom at the moment without any more significant downside. So that's kind of the way I'm leaning. Again, 1 foot out the door, but still generally leaning towards upside over the next at least week or so. We're getting close to that week of the 10th of March, though, and that's something I pointed out a few months ago, is from cycle low to cycle high, based on previous cycles, the week of the 10th of March would be an important one. All right, catch you later.